All right. Can everybody hear me okay in there? If you can just put a yes or Y. Okay, great. Thank you. Thank you, Anna. And thank you, Morgan, for the opportunity here to join with your trading pub here. Thanks, everybody. I just want to tell everybody here before we start, I like personally to have some of your questions asked while I am showing you our stuff. So make sure you feel free to ask me questions. I'll go through our little slide presentation here, but more or less, I definitely do appreciate the questions so I can realize or see if that you guys are on the same page as I am, or if I need to explain something more. First of all, let me try to give you a little background as to what I do and how we do things here. We're trying to, well, my background has been, I've been on the trading floor for over 25 years, been on the floor exchange here, and once we started deviating to getting off the trading pits, we decided, we had to go and start trading on the screen here, which is not a very talkative trading partner. You used to be able to stand in a pit and be able to communicate with somebody, a person next to you, or somebody close by, and you can communicate with one another. So it kind of got a little boring upstairs for me in the office, and listening to the talking heads on CNBC or whichever business station you listen to can get a little bit boring and monotonous after a while. So we decided to open up this little trading kind of a room here from the floor, since I do have access to it. And we overlook the ES pit as well as the bond pit. And we, because of my connections here to the people on the floor, we were able to get some information to our clients and be able to share with them. What we try to do here is we trade on a daily basis. We give you support and resistance levels from the floor. We'll give you pivots from the floor, and the pivot is not exactly the kind of same pivot that you are all used to. We try to basically scalp the markets. We try to take advantage of ebbs and flows, being that this is my background where I was when I started trading. This is what I've tried to transform here onto the screen. And we've put together a pretty decent methodology as to what we look for technically, what we use, and then we try to throw in the fundamentals every now and then when they come out. And between the technicals and the fundamentals, we try to keep ourselves on the right side of the market, and that's the most important thing for us as far as we're concerned. Um, we definitely, what we try to do here, we come and give you some support and resistance levels, as well as some information I get from the floor. I inform everybody of any type of economic reports that are going to be being released in a trading day, and the combination of the then we just sit down and we just let the market kind of tell us what to do. Our main objective here is to have the price action of the kind of dictate what we're going to do. So, and it allows us to enter our trades. What we try to take out of it is the price action gives us our entry points and our exit points. Also, our support and resistance levels also give you your targets that we're always trying to achieve, whether they be in the ES today, as we had a kind of a dramatic kind of move. And I'll try to show you some live charts here as to what we tried to do today, given the drastic move here in the middle of the day, which was it kind of started in a very weird type of moment. But because we trade every day, we can actually give you some real life charts here to kind of show you what we do. So what we're going to try to do on this webinar is kind of show you how, when we enter our trades, where we're targeting, what we're targeting, why we're targeting those levels. We talk about the pivots that we get, and the pivots are not exactly the same as um, what you're used to, like I said before. And then also we are going to talk a little bit about, sometimes we try to squeeze some trades, as we tried to do today, and especially because we try to take advantage of the movement that we received. And the uniqueness about what we kind of do is basically we do this on the floor every day. Like I said earlier, I was kind of getting a little bored, and I was very monotonous sitting upstairs in the office, so I needed to get some to hear the pit action. And I realized that we can share this with some of my other clients that we have. We have a lot of other traders have also gone up to to their offices, and they listen to us, and they kind of appreciate what we're trying to do here and what we're trying to bring back to your office. And being that you can get this, pretty much for a nominal fee, that you can get this information from the floor. We do offer this unique type of experience for the traders, and also the methodology that we use. We're always focused in on and trying to help other traders understand what we're trying to do and become better traders. And at the end here, we're going to talk a little bit about money management and risk parameters, which are very important. We believe, or I believe, I should say, that it's very important for us to come back tomorrow. That you can't let one day determine whether you're going to be able to make this happen or not. You have to be able to stay focused, stay in the markets, and understand what we're trying to do and what you're trying to do. We only trade a couple markets because I believe it's important for you to understand the market that you're trading, what makes the market move, what makes the market kind of hang around. And then, like today, in the middle of the day, when really not much should have been happening, all of a sudden we get a little breakout, and how to be able to take advantage of that. So we focus in on the a few markets only because I think it's important for us to be able to understand when the markets do have their movements, and why they're moving. And we had a little bit of help today from the bond market, as they had the little move first, and then I was like saying to our clients that there's something's going on here. I don't exactly know what. And then as a little time went on, the explanation about the either news conference or the saber rattling came through, and the reasoning for the market movement became apparent. All right. Again, as I go through some of these slides and what we do here, feel free to join any kind of questions that you might have, and we'll try to answer them. Charts really, this is a little bit dated, but really the reality of it is you can take the methodology that we're teaching and kind of expand it to other markets, and to be able to trade the other markets just as easily as this. I think technicals are important to us. We use momentum. We also try to use um, uh, levels that we give out every morning that I feel are very important to what we try to do. I had a trader who who I'm teaching come back to me and say that before didn't know when to enter his trades. His timing was off. He had the right idea, but couldn't understand when to enter his trades. And what we try to do to expand on his little problem is to give you logical reasons to enter a trade, to make you feel comfortable in entering your trade, and then to help you find the targets that we are looking for to exit your trades as well. And so we believe, or I believe, that every time you enter a trade, you are looking for logical reasons to get into it and logical reasons to get out of the trade. And we're not going to, like today, for instance, say, oh, the market's going down, so I'm going to sell the market. That to us doesn't make any sense. You need to have reasons where you're entering the market, and I'll expand on that a little bit later when I show you our live charts for today. What I meant, we did not jump on the shorts right away. We kind of waited. We had a couple good ideas of where we are going to enter our trades, and then the market just kind of fell through and gave us those opportunities. In our first chart over here, we have our pivot on this first horizontal line, and as you can see here, market held it very nicely here in the morning. And once the stock market opened up and right around this area, it started turning over. Our this is a Bollinger Band. Our blue band here is a Bollinger Band, where it also helps us stay on the right side of the market. And for whatever reason, we found that the Bollinger Bands that we have keep us on the right side of the market. It does a very good job of finding our, keeping us short if we needed to. And again, I can show you that on the live charts a little bit later. In this situation, though, as you can see, our pivot is that first horizontal line. Once we penetrated that, pivot, and the reason it is as a good sale for us was because of these various levels that it tested earlier, and tested and popped off of it and popped off of it. What happens is, and this is what we try to understand what the market's doing with the price action, is the market's held, and then all of a sudden decided to push through. You're going to get obviously some stops along the way. And then in addition to the stops that were hit, you also received, probably some information that created this little push to the downside. Our second horizontal line is our first technical support that we had. And what we try to do is try to take advantage of ebbs and flows in the market. We're trying to buy support levels sometimes, especially if there's strong support levels. Again, today when the market decided to do its own little song and dance and tried to break off, you have to be exceptionally careful as to buying support levels. Uh, Saying that though, I mean we do try to take advantage of ebbs and flows. I think we do a pretty good job of finding our good entry points, which is one of the main problems one of our traders had before, and be able to maximize the profit potential that you have in each of those trades. In regards to the uh, risk involved here, we're trying we try to keep our risk, well we do keep our risk on the downside to 2 points on the ES, and obviously a minimum of 2 point profit potential target, and possibly, given today's market movement, we had an opportunity here to make 4, 5, 6, even 7 points on these trades. So we keep our losses at a minimum, and we try to maximize the profits, which is what we try to do. I also do understand and do appreciate the fact that you pay a nice commission to your brokerage houses that force you to, what we try to do is try to stay away from creating too many and too much commissions. We're looking maybe 4 or 5 trades a day, depending on the volatility of the markets. Yesterday we only had 3. Day before we only had 2. Again, it's all market driven. It's all determined by price action, and given all those situations that the market shows us, those are how we enter our trades or not. So one of the questions here is, what are Bollinger Band parameters? 2 and 20 is your answer. You can see here, it comes down here to our first horizontal line. That's our support. We're definitely take some profits against that first level. If you bought them there, you're able to maybe take a little bit of a push to the upside. But once we get a trend, we do try to talk about, we're not trying to maximize profits on the upside in this situation like we're showing here, unless the market kind of gives us an indication. If you bought this first support level, it took a little bit of heat, but we were able to make 3 or 4 or 5 ticks on this trade. And then once we started breaking through, tried to get you short again, given this double bottom here, and then coming down to our second support level. Again, levels where the market tells us that you want to get out of your shorts are created by the market. So if we came down here and we were short here, anything above these triple highs here would have been an area for us to say that we want to exit any type of short that we had. If you're trying to stay short here and trying to maximize it, and then until we get down to the third, this is a trend line that you see here. That's what came the last level of support that we had, and then that's where we would have covered the rest of it. I just trying to explain how we're trying to maximize the profit in a trade by trying to keep you short. If you sold them up here, even though this is the first support level, you take some profits off of here, you keep something on. We would have probably said anything above this area right in here. If you can see my arrow, would be a level where we would exit. We never got above it, got us down to our next level. Then we have these three bars, and we would have said that we want to get out of any shorts above that. We never got above that, and it helps us push all the way down to these levels down here. So that is a nice example, because it's a trend kind of day. Now, at the same time today, we were able to exit shorts because the market, got down to wherever it was. I can't remember the price. And then we had a level where, just like this, where we said we'd want to get out, and we did, and then the market did pop up here. So we got out of our shorts, and then later on in the day, I think the market I don't know what it's doing right now. Let me just check. Oh yeah, they continue to push here and go down, and obviously we were out of shorts at that point, and then we would try to find the ways to get in. All right, so that was that. So I was just showing a way to maximize our trades. Trend lines are important. I think it tries to help us keep us on the right side of the market, especially when we are doing this, when we're trading on both sides of our um, um, Bollinger Band. The trend line tries to keep us on a straight narrow, a straight path here. We can see the upward movement, but we can see the volatility also. We had these 2 points set up when it came here to that third point. This is a little buy for us, and again, it all depends again on what our profit potential targets are. If we're looking to take 2 points out of trades, we're getting those levels, we're getting those movements, and then once we got through this initial trend line up here and made a new low, I readjusted that trend line to come to this newer low, and then once we came back down here, it gives the ability to buy it against this level as well, and then the market move. Again, these are things that we look at so that we can uh, uh, get our entry points, to feel good about your trades that you're putting on, and that you're not just kind of, haphazardly trying to find places to enter a trade or have no logical reasons. The one thing that we talk to our traders mostly about is to have logical reasons why you would want to get into a trade. Always have reasons to get into a trade. In this situation, we're talking about a trend line. The other situation, we're talking about um, busting through a double bottom or top, or staying below our pivot. And are they pro proprietary floor pivots? No, they're not. I think anybody can try to, we just like I said, we have a unique situation in which we were able to give you those and share those with you, just because of where we're at. And so again, if you link in, we have a free trial offer thanks to TradingPub here, TradingPub. They're giving us an opportunity to share these chances with you. So thanks to them that you'd be able to join us and try to see if we can help you out if you are trading ES and bonds. All right, let's go to the next. So here's a little bit more. This almost looks like what we saw today, maybe. Oh, but it's not. But again, these are where we are finding reasons, key entry points, intraday targets for us to get in, get out of our trades. And this is how we try to maximize our trades as well. Um, the situation, again, this is a good adaptation of today's trade, maybe. Um, okay. Um, and the market gave us a reason. Again, we need reasons to get into our trades. Pivot is up here. We're staying below our blue band. We're a little bit negative. We had a double top here where we could not get through. Enter reasons to enter our trade. Obviously, right in this area, right in here. Gave us a little flush down here where we had our first target level again. So this becomes a little bit of support. Now we bounced up. Now as we push through, you can see this first support level now becomes resistance, and the market cannot get above this area right in here based on that first target area. So the first target area was a decent level. It was able to, you were able to bounce off of it a little bit, and we're able to take advantage of this and move to the downside, continue to the downside. Um, Today, I think we kind of did well. We were trying to stay short in the S&Ps. Um, if you're familiar with the prices, our pivot today was 65 in the S&Ps, and we had plenty of reasons to try to stay below it, which I had actually a 64 level where we were getting short and a very tight stop there above 65 and a half to get out of any shorts. And this was early on in the morning, and so we were absolutely trying to keep our clients short all morning, and I think we did a pretty decent job, and we were able to, you have to be a little bit patient there, but once we got uh, through the 60 area, it kind of opened up, and it was able to get us down to our next level support being at 56, and then we had a little bit of a bounce there. Um, and we're going to talk about that. But we did, I think we did I think most of our trades as well. But getting back to, anyway, but so this is what we are trying to do: find entry points and find reasons to get out of our trades, and where we get out of them if you still want the position to have this position. So in this situation, this big trend day, we would not have gotten out of this trade once we made these lows here until we got above this level over here, which we never did, which was this first level of support. It allowed us to stay short, to come to our next level of support there, our next target. And then again, you can see how we stayed below our blue band, make us come all the way back down here to our final support level. And then the rest of it kind of just, this is almost exactly what's happening right now. We held, we rallied, and then later in the afternoon, once we got below our blue band, we had reasons to stay short, reasons to try to find a place to get short below this new low, and market continued to down tip. So so that's kind of a little bit of a move today, what we were trying to do. So again, we're looking for reasons for our trade. This is a kind of a morning push here to the downside. We had a little bit of this is a support trend line here from a couple days before, which the market, which I do kind of keep up on our charts here, and the market does come and hit that support level. Also pivot up here, reason to get short again, right in this area, coming down here to our trend line, which was a place to get out of our trade. And for the most part, the market did hold this trend line on the downside as the market kept creeping down. Again, gave you reasons to buy them as every time it hit, and you were able to make a little bit of money on these situations. These are how our charts look every morning. They are from left to right, a 5-minute 10-year bar chart, uh, then followed by a 5-minute 30-year bond chart, followed by a 60-minute ES chart, and followed by a 5-minute bar chart for the ES. So again, you can see how we line up some trend lines in there, and keeps us focused in on the right side of the market. Slowly, you buying them as they dip down, or especially when they're trading on um, both sides of our blue band there. And we look at the longer term stuff to give us some outer support and resistance for further distance away from what we're looking at. You can always find good resistance using a daily and or a 60-minute. And the reasons that we use the 60-minute, I think that some of the reasons that we use a 60-minute and a daily give us those further away support levels that you wouldn't get, during a day, or using a 5-minute. And I think we have good support. I think this market has a lot of geopolitical holdings behind it, forces behind it, I should say, that are keeping this market technically weak, the one today that we're trading. And I think we can easily go back down to a 17 level here in the ES, especially if they don't resolve anything, and the rhetoric becomes worse. So that's just my own little opinion. How are you looking to get trades based on technical analysis and on the levels you choose upfront? Well, uh, I think that's how most people trade. Honestly, that's how traders trade. They trade technically, and the markets, because they've gone to uh, on the screen a lot, and especially over the last few years, where most of everybody has a chart and can get real-time quotes and real-time charts. That people use charts, traders use charts right now to trade. I mean, it's just really that simple. Um, we also use our technical support and resistance levels to give us targets. And again, those are all levels that that's what we're trying to do in this market. I mean, we are using support and resistance levels to enter our trades and get out of our trades, and also technical analysis to be able to give us reasons to get into our trades. Um, I think that most traders use technical analysis and levels to be able to trade. I mean, the thing is, we use technical analysis in the old days where we were standing in the pit and we would have to walk out of the pit to be able to click into a computer that gives us a printout to be able to bring it back in, and then about an hour later, I had some technician who would always like update the 5 minute charts manually, and then every like half an hour you go get a new chart. But now everybody has the ability to have a fresh chart in front of them, and your charts, and just like they were, when we did not have, not everybody had the ability to get charts right away. Uh, those were important. They always have been. So technical analysis is a big fundamental reason that you find reasons to enter your trades, and there's no doubt about it. Yeah, Bollinger Bands are blue bands that we have here, and I said they can't keep us on the right side of the market for whatever reason. I think they work pretty well, so we gotta give him credit for that. At what point in time do I determine it's a trend day? That's a good question. I really don't know when it's a trend day. Today it was actually very easy to determine a trend day. A couple things happen. First of all, when we have our support levels and they do not bounce off of them whatsoever, that's one indication that we're having a little bit of a trend day. We think and we believe that our traders have told us that our support levels do work really well, and they use them throughout the day a lot. We used them today for exit points on our trades all day long, which was fantastic for us. Sometimes they weren't good. I mean, if you were buying them there, and I did warn today that our clients when we were trading that we did not want to step out and buy these levels, only because the market was trending one way and it was not giving us too much of a bounce. Uh, the bond market also gave us an indication this morning as to something was up, and they really kind of led the way down for the S&Ps. They started right before extending their range to the upside, and there's a lot of inverse trade going on right now with S&Ps and bonds. More so, it comes and goes, but for the most part, it's there. Today, definitely was there, and it was a very good situation for us to give us an indication of the market might be down ticking. Did I think it was going to go down so much? No, but all we did was take advantage of our levels and understand that what was happening, and to be able to tell our clients that something was up. And then we found out later on, about an hour later, what was happening and why the market was doing what it was doing. The trading averages are just some 200 moving day, 50 moving day, but then the green band that you see here is proprietary to Pit Intelligence. It's an average that we put together using value areas that we created during the day where high volume areas are. We also use pivots that the markets have used in the past and clump them into an average that we've figured out. So the green band that you see is a proprietary to us and the people who obviously use our stuff. But the rest of them are some simple 200-day and 50-day moving averages. Do I use yesterday's high and low? Oh no, for the pivot, no, I do not use the high low divided by 3 and settlement price and then divided by 3. That I think is it works. I think that everybody knows the equation and knows how to figure that out. Uh, but everybody knows it. So yeah, everybody knows. I'll just stop at that. It just doesn't work so much for us as well as what we use. That's all I'm going to try to say. Um, why did the market go down so much today? Because of the saber rattling talk that was coming out of the United States and Europe in regards to what Russia is doing in Ukraine, and they started sending more troops there. And so markets don't like uncertainty, in the market today definitely reacted to the uncertainty that's being created in that part of the world right now. Let me answer the question in regards to do I have any kind of opinion for tomorrow? It all really depends on the you know what's going on with these rhetoric comes out of all the talking that's going on with the people who are talking. If people would just be quiet and let instead of I don't know what's going on. It all depends on how they deal. Look, in this market, we could go down another 400 or 500 points and rally back up to the highs the way these things are going. But I think we're weak, and I think we're going to stay weak until there's some clarity out of there. Um, so it is definitely a problem that there is happening. Are certain days of the week that are better to trade? Um, well, uh, without really getting into too many reasons why, Monday's usually slow, but not all the time, and Friday's usually slow, not all the time, and you can imagine why, just extension of some weekends. Um, but that's not to say that that's always a hard set fast rule. We actually try to do most of our trading in the morning. We try to trade up to noon Chicago time. We feel that it's the best time to trade. We feel that we're going to get the best market action, market volatility and movement during those hours. I think that the trade gets a little bit sticky, a little bit one-sided, and then a lot of uh, 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 computerized trading models come into play at the end, especially if there's some unknown, issues, just like there's geopolitical stuff going on. We tend to kind of stay away from the last hour of trade, especially after the bond market closes. I think the S&P's kind of get a little bit carried away ahead of themselves a little bit, and they don't give us a really great trade after that. So we trade the morning hours, I think, better than we do anything else, and we focus on that, and that I think works well for us. Only because I've been around here too long, and I realize that sometimes at the end of the day, you're getting a lot of traders are that's a loser bowl we call it. They just want to try to make up some money they've lost all day. So we try to stay away from those situations. The market gets very uh, fidgety and doesn't trade too well. What are my, how do I figure out tomorrow's support and resistance? I'll go back, look at some charts. I'll go back and talk to some of the people on the floor here as to where they think the markets are going to go. And, some good traders on the floor here. And, that's what we try to do. But yeah, I mean, it'll be based on overnight trade. It'll be based on what happened today, and it'll be based on going back a little bit and see what previous support and resistance levels are. Do I watch the fives? No. Bond stops. The bond market has been very interesting. Bond market basically trades is kind of a it doesn't trade as clean as it used to be, only because the government's involved and they get themselves into the markets, and they have a lot of influence on what the market does, and sometimes that market is not as clean as it should be. So it's a very trendy market today. Obviously, but once we started extending, uh, you had to try to buy it. It never really dipped at all, and so it was a really tough trade for some of my partners in crime there on the floor in the pit today. What time in the morning? We come out at 8 o'clock, 8:15 Chicago time, just before the S&Ps open up. That kind of gives you levels for the day. So, Brad, if you're there, you can just give quick info here so some of the people can come in tomorrow. If you're there, if you're not, that's fine.
Yes, I'm here. No problem. Thank you. Hey, a quick question out there. Has anybody seen the link to come in as a guest in Saul's Pit Intelligence or CME Pit IQ service. We have a link that's in the announcement area. What I would do is I would go to that now, just take a minute and register. You'll be registering for GoToWebinar. It's a direct link right into Saul's booth. He is there during the trading day. He's trading himself based on his concepts of price action. He does lay out levels before the cash open. These are his levels. Somebody had asked a question before whether Saul's levels are proprietary levels. These are levels that Saul has learned to put together over his 20 years experience. He gives the pivot in the S&P 500 E-mini. That's his pivot in the S&P 500 E-mini. Then he gives out levels on top and bottom of that pivot he calls support and resistance. So we'll give about 3 or 4 levels above, 3 or 4 levels below. That'll be the basis for his trade. He looks for a 2-point win with a 2-point stop. And he is there during the trading day to field questions. He's there during the trading day to give you exposure to what's happening on the CME Group trading floor. Ultimately, what he does is trade for himself, and he also mentors a select group of traders how to trade like he does, and he does it all personally. So if you're out there and you're looking to learn how to trade the market as you're living, and you're interested in really buckling down on your trade, and you want to find somebody to teach you, tweak you, take you under his wing, put his arm around your shoulder, Saul's a great guy for that. He's been doing this for 20 years. He's the real deal. We have a post in, it says get daily access to CME Pit IQ with a link. Click on that link now. It takes a minute or two to register. Not even a minute. It takes like 30 seconds to register. You'll be registered. You'll get an email to come in through GoToWebinar. It'll come to the email you're registered with, so register with the right email, and you can join them and connect with them on the floor and take it from there. So listen, back. I'll let everybody know. So the link is there. It's in the announcement section. Don't hesitate to click on it, and we'll take a minute and register.
All right. As you can see here, we're getting to the close of the S&Ps. So getting a little loud here for just a second. Okay. All right. I think we're going to get a little bit more of a push here in about 15 minutes, and then we'll be able to. We won't get this noise anymore, but it gets a little bit loud here just on the close. Yeah, you can come in. This is definitely a free trial for the rest of the week, and no, that doesn't cost anything, and you can come in for tomorrow and the next day and kind of hang out. Let me introduce yourselves to me and to Brad here, and we'll see if we can try to work together, and hopefully you like our levels and like what we do. Again, we are focused in on the daily on the individual day trader here, and we try to keep it that it doesn't cost that much to make those trades. I mean, we worry about commissions a lot, and sometimes I'm not the friend of too many brokerage houses, but then again, I'm not their friend because they take too much money from me as it is. So it's and I pay less commissions than everybody, so it's only because I'm a floor member. It's still not right. Anyway, that's another story. Let's not go there. All right. So here we have again. This is how we are trying to keep you involved here in the day's trade. We're getting a little crazy market. This is at the end of the day. So we look back and we say, well, how can we have taken advantage of this day, and what could we have done? And again, you could use this kind of chart, whether it be bonds here, or if you were trading S&P, is kind of the same thing. The uniqueness about what we try to do is we're showing you technical analysis that kind of lets you take advantage of little ebbs and flows of the market. And you could probably get this done on a lot of trades. I have a friend of mine, trader, who's next to me. He's used the same kind of situation that I have here, but he uses it for oil, and he likes to trade that market, even though I think it's a crazy market. But again, that's his prerogative. But again, you can do the same stuff anywhere. And if you can see here, crazy number here. This big bar is Obviously, a number that came out created a whole big move, and then we're coming here and you're staying. You can see you're staying below the blue band. You come up, touch it. It's a sale first time to it. Hey, got a nice opportunity to make some money. Once we hold 2 bars above it, as we did in this situation here, it'll give us an opportunity to say, okay, we're trying to buy it. And where do we buy it? We have our green band coming in right across. We got above it. That was a key there for us to enter that trade and take advantage of this move. Then we completely fell out of bed here, and especially at this level here where we had these 2 support levels. This gave us a little push to the downside, but as you can see, it quickly reversed and got above our green band again. That was another buy, and this time we got above our blue band as well, and we tried to stay long going up to through these levels. But again, I would, I understand what I'm trying to see here, and obviously if we were trading our stuff and being in a room, I'd probably be trying to keep you on the right side of the market and tell you where you don't want to be short anymore, and it gives you a reason to get it, not be short. Sorry for the noise, but we are on the floor. Hopefully you can hear me okay without one broker is giving away. They're just giving away the farm over here. This is a 5-minute bar chart that you're looking at. Again, here's a little bit ES chart. Again, up here, pivot, daily pivot is all the way up here. It also happens to match up, um, um, green band. So once we started staying below it, now got below our blue band. We're trying to find a reason to sell it, maybe, and we depending on what the support and resistance levels are, and so on and so forth. That also comes into play. But thank you. Um, we were finding reasons to try to be short because we're staying below our blue band and staying below our green band, our pivot. It's kind of what we tried to do today, and the market kind of downticked a little bit. So let me see if I can do this in a faster way and can show you. Okay, good. So show you some uh, trades today, and then we'll come back to psychology. Let me see if I can do this. Oops, going the wrong way now. All right, let me try this. Oh, there we go. Perfect. That's what I wanted to do. And let me show you a ES chart here. There's a 5-minute ES chart that we showed today. All right. We are, this is our 65 up here. All right, this is where our pivot was this morning. Opened up, traded a little bit above it. Our level below was 68. Above was 68, and we came up to 7 and change. But once we stayed here and we started staying a couple bars below our blue band and below our green band, right in here. My call here was to kind of stay short here below 65 and a half and see if we can, especially up in this area right in here, if you can see. This area right in here was where we wanted everybody to kind of stay short. This triple top here was also at 64. So we had a tight out, anything above 65 and a half. Market traded in this 2-point range here for about 20, 30 minutes, and then finally downtick. We had a first support level was 60, where I just told everybody that we wanted to take some profits there. We did not necessarily want to get long, but take some profits and then try to see if we can get down to our next level of support, which was we had 56, and which ended up coming down in here. First time to it, we were looking at we kind of scale into our trades. So we are trying to buy 56 and a half and 55 and a half. If we can't get it, we ended up buying 56 and a half here, and the market made a nice little rotation back up here to 58, 59 and a half. If you bought them there against our first level, you made a nice little quick rotation, quick couple points. And if anything, if you were still short, this is how you bought some at 60, and you bought the rest of them here at 56. Now the market kind of came in here, and we were trying to. I thought that maybe if we got above the 60 area, I think we were going to run back up here. When it failed here, I told everybody that we wanted to be out of any longs. below 57, and I suggested that maybe we can get, once we got below the 57 and we couldn't rally, that we can get short here uh, with a 58 out. And this was when we were trading in this area right in here, 56, and 50, when they came back up here to 57. Uh, if you could have got, if you're looking for a 2-point stop, you could have got in at 56. And I said we want to have a 58 out. That's where we were out of any longs, shorts. I mean, then the market now got us. Then we started really breaking. Um, we had 51, which I just said that all we're going to do there is try to um, cover shorts. And once we, and there was, if you didn't do anything else, there was another sale here below 49 and a half, in which we told our clients that we wanted to be short below 49 and a half, and then another level here at 45. We wanted to be short here at 45. So again, if you're short from the whole move down, that was great. But the market was very nice to give us an entry point here below 49, another entry below 45. What is the advantage of being on the floor? I think as you can see, sometimes it keeps you awake. And there's sometimes we did get to certain levels today where the market did finally the pit gets you awake. You can also see a couple orders coming into I could see a couple orders coming into the floor sometimes, where I know a couple of our clients took advantage of it. Where I said the early morning brokers, standing in the pit and trying to buy a nice chunk of change at some price, and they, we took advantage of it, or somebody did, and we're able to use that. Sitting behind a computer, you sometimes don't realize why the numbers are moving. You just it's a matter of information flow more than anything else, and that's what we. That's why we do it off the floor here a little bit. And I think it adds a little bit to just the monotony of the day. Again, I would have to regarding trading stocks. I couldn't really tell you because I'm not really focused in on that. I'd have to look at it, so I couldn't give you a straight answer. What size do I trade? Well, once we got on the screen here, well, in the pit we used to be able to trade a lot more, but once we are here on the screen, I'll probably end up on a busy, or if I really get it, I'll probably end up doing about a ton lot, which would keep me entertained only because the volatility is greater. It used to be where we would trade 100 lot. It wasn't as big of an issue as it is now, where if you're trading 100 lot, you're open ended on the risk here. But we used to be able to trade 100 lots and have whatever. Not trying to throw numbers at you. I don't like doing that. But 10 lots feels like 100 lots sometimes. And so, the volatility is great and the markets move for whatever reasons they move. I'm always trying to know where my exit point is before I enter a trade. So that's why I try to, I'm always using that. I don't use 1 and 2 minute charts at all. They doesn't really, to me, give me, I think a 5 minute gives us a good idea of where we want to go. I just kind of explained how we took advantage of this move here. We were short from 64 level. I did not really want anybody to buy the 60, which was our first level down here. I kind of told everybody, let's try to stay short, and I kept lowering our stop. We wanted to be out above 60 and a half, then we wanted to be out above 57, then we wanted to be out above 58, and I kept moving the stop lower and lower, so to be able to keep take advantage of the situation that was in front of us. So that's how we take advantage of those kind of longer, bigger moves. Today it was kind of a little easier. The moves came quick, and we really didn't have to really squeeze them so much. They just happen a lot faster than usual. So that again, as you can see here, like I've been saying, the blue band keeps us on the right side of the market. Uh, you would here we wanted to be get out of any shorts above 47. Never got above 47. Let us take advantage of another this move through here. We had 38 and got down here to 39, but then we did break down. So again, well, we got down to 38 earlier. But anyway, that's how we doing. Just showing you that the uh, on what uh, on the technicals, on what the market is telling me. Like I said, I'm looking at price action more than anything. So the price action allows me to determine where my stops would be. I'm not really guessing as to where they're going to be. I will say that when we came down in this level, I did say that anything above 42, we want to be out of any shorts. And when we were moving down here, and we did make a little bit of a pop above 42 all the way up to this is 46 and a half. So kind of saved us a little bit of money. But then eventually, if we got above this level, we wanted to be out. Would have got us above our blue band and maybe rotated the day to the other side, but that never happened. All right, so I use technicals to keep me on the right side of the market. I'm not price action more than anything else. And like I said, this we use. It's kind of the same thing that I was showing you before. All right, let me just get back here to some of these things that we just want to touch on really quick. Again, I hope I'm giving you some good feedback here. Okay, there we go. All right, we just got to deal with these bells here. Just give me 1 second. And they're going to be coming up really quick. And this is the close of the pit, the S&P pit. So give me a second. All right, how was that? How exciting was that? Whew. All right, so again, because we are, using price action and because we're trying to, get into and out of trades, we're always finding reasons to get into our trade, and we're always trying to look for the next situation. So it's not a single trade that is important. It's a process that I must focus on, and that is very important because we kind of teach you a methodology. We kind of give you an idea of the things that we want you to look at, look for. We try to tell you that we need to have reasons to get into our trades, and we tell you what those reasons should be, and we put those together and and give you an opportunity to look for trades. And the most important thing about what we do is we try to make you feel confident in the decision-making process, so that when you put on your trade, you're feeling good about it and not feeling, oh my God, is this going to go my way? Am I just throwing up darts at this or what? It's a situation where we're trying to make you get comfortable in the trade. So don't focus in on one trade. The whole process of what we're trying to do here is very important. I believe it's not my job to know whether it will be a winner or a loser. It's my job to recognize the signal and act upon it. I think very important. Again, like I said, we show you what you're looking for. We try to tell you what to look for. And then it's up to you to determine if that trade is good enough for you or not. I'm not trying to change anybody's trading style here. I'm not trying to change your amount of risk that anybody here is trying to take. I'm just trying to help you put together a methodology that you're comfortable with, that makes sense to you, and I'll work with you in regards to trying to determine, what your logical reasoning is to enter those trades, and if they're right or wrong. And within time, those you found the reason that works for you, and if you believe that that's a good reason, then you should go ahead and do it. Um, Okay, so be patient and wait for opportunities. They will come. Very important. I think a lot of traders have the same. They make the same mistakes over and over again, where they are, totally, just trying to you look for trades, or they're standing around and they're not getting, not waiting. What do you do? I mean, when am I going to make money? You have to be able to be patient and be able to take advantage of a day like today, where you definitely could have made more than 2 points on any of these trades. The market just gave you the 2 points more, and more than that. And you have to be able to, like I said earlier, come back tomorrow. Make sure you have the ability to make sure you come back tomorrow so that you can take advantage of days like today where you can make, your a week or two basically in one day. Because there are days when things are not going to be, there's not that much there, and you have to is be patient and wait, and don't just trade for trading purposes and trading just because you have to. When time is finished, it is forgotten to focus on the next opportunity. It's very important to know that there's always going to be a next opportunity. That you have to not focus in or dwell on the ability that the last trade um, was good or bad, and that's the one thing that is very hard to do. I can honestly tell you, I'll remember my worst days much more than I'll ever remember my best days. I mean, those worst days are will stick with you and stick with you, and they are very hard to try to just get out of your gut and out of your system, because it is just you just remember those days. My good days, I don't they're the feeling that you get during those days are not the same. So and it's very difficult to have an even keel, and that's the most important thing. Is I'm not going to get too excited when I make money. I'm not going to get too low when I'm not making. I'm going to try to keep it on a nice even keel, steady, as steady as she goes, so that I can be able to focus on the next opportunity. And that's a hard way. It's a hard thing to do. So those are some of the things that we try to do as far and trading. A lot of trading is mental. It is something that you have to fight with yourself, not to get too down on yourself, and to be able to focus and to control and look for the next opportunity. It's a very interesting game, and I can probably promise to tell you that any uh, feelings of trading that you're going through or gone through or have gone through in the past, I've probably experienced it 10 times over, unfortunately, euphoric and not. And it's just that we have to learn to deal with them. And I'm talking to somebody is a good way of dealing with them sometimes, but I'm not saying it's always me. All right. This is a little bit about risk that we like to talk to our traders about. They don't get themselves too caught up in the money, because the money is what makes you make the wrong decisions. Uh, and it is very important for you to understand that, how to control your portfolio, how to control the amount of money in your account, so that you don't completely focus in on money and focus in on the trade instead. And that's a very important thing, is that you have to try to focus in on the trade more than the money aspect of the trade. A quick question in regards to when price breaks a resistance or support level, do you enter immediately or wait? We Again, it all depends on how strong it is, but we're usually in when they get there. So we don't usually wait. As long as we believe in the level and feel strongly about them. And again, you have to have the ability to feel confident in those levels that we offer. If you didn't feel confident in the levels, then you're not going to enter them right away. But if you feel confident, and if you see that the levels have been working over and over again, then the more you see that, the more you feel confident, and the more you're going to get into those trades without second guessing yourself. And that's what we try to do. We're not trying to second guess ourselves as to what we're trying to do. Today, for instance, I told our clients that we're not going to buy any of our support levels unless we're short, and to cover shorts against those levels. Otherwise, we were not buying today on any of those support levels whatsoever. We usually don't give away 8 or 9 levels of support either, like we did today. So that's another new thing. So, but again, that's the kind of day we had today. So money management, risk, very important. I think it goes to your mindset. It goes to the psychology part of trading, and I think it's a very big aspect that most people tend to forget and not focus in on. I think it's something that we talk to our traders about all the time because it's very important to make sure you don't overtrade. That's the worst thing that can ever happen because, again, if you overtrade, you're not thinking about the logistics of the trade, you're not thinking about the price action, you're thinking about the money. And when you start thinking about the money, you do stupid and crazy things. So learn that all the time. So if you just for a very simple example of how we control and manage the trade, the money, the risk as far as money is concerned, is let's say for you have a portfolio that's worth about $10,000, or you have an account that has $10,000 in it, one way or the other. Um, how many? We're going to risk 10% of that portfolio in one day. Okay, you're not going to risk more than 10%. So in our case here, if we have you have $1,000 here that you're going to risk in a trading day. Now you got to say to yourself, all right, well, how many trades am I going to put on per day? Well, just to keep it simple, we'll say there's 4 trades a day that we are trying to get into. Okay, 4 trades in one day. So 4 trades in one day, you have $1,000 to risk in that day. Now you've come out with $250 per trade that you're going to risk. Well, now now we go backwards and say, okay, well, I've got $250 to risk on a trade. Now it allows you to tell yourself how many contracts you're going to trade with a 2-point stop in the ES like we have. Each 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 point in the ES is $50, and we have a 2-point stop. So each one lot will give you a $200. Um, uh, each one lot for 2 points gives you $100, so you could trade 2 lots. So it gives you $200, and if you really pushed it, you know, 2.5. I don't know. We're good to have. We'll just save the half for another day. But so you can put on 2 contracts for 2 points, and that gives you your out for for the for the uh, for the trade. So now you could, let's say if I only tell you that you have we only are going to risk a point, or I say we're going to risk a point and a half, let's say, because today I said you could be short at 64 here and you can get out at 65 and a half. Well, now you got $75. Now you can do 3 contracts, right? Because you're only going to risk 225 if you get stopped out. So as long as you figure out where the price is to enter, if you're getting in at 64. So you go backwards. You find out where the exit point is, and then you can say to yourself, all right, well, this is where this is how much I'm going to risk on that trade, and this is what you're going to do. So go backwards sometimes, and you're able to, be able to get into the trade. You'll know how many contracts you need to put on, and then if it's only one, then it's only one. If you only have $300 to trade in a day, then you can only trade a one lot, and you can only do it uh, 3 times. Okay, that's fine. As long as we don't want the money to be able to drive the trade. We want the opportunity for the trade to drive itself, and that's the most important thing. So going backwards here allows you to figure out which way, how much you're going to trade, how many contracts you're going to put on, uh, where your risk parameters are going to be, where your outs are going to be, and then figure out where you want to get into the trade. Always work backwards. Sometimes it works better than just getting in. Now, obviously, it's not always going to work that way because we had a sale below 45, let's say, and you have a 2-point stop on that, so it's 47 would be your out. So you have to figure out, we have to take the full 2 points if we're trading a momentum trade and we're pushing the market through. So that is going to be one of the things you have to consider. But you know, it, the most important thing again about money management here, it keeps your psyche in tow. It doesn't make it get out of hand, and it gives you the ability to focus in on the trade more than focusing in on anything else that you might be considering. So again, price action again is the important aspect for what we do and how we do things, and those are the things that we focus in on. So all the things that we talk about,
So,
Wes talked about, is basically just to keep you focused in on the price action versus trying to focus on the money, and looking at the market to give you entry points and exit points all day long. A question here: do you have a special offer, an offer for us today? Yeah, come in and get free opportunity for you to come into our website, listen to our room, listen to what we do every day. You're more than welcome to click in the little site there and to be able to get yourself into the room and register. And make sure you give us the proper information so we can communicate. Last thing we need to do is give us some wrong email or anything like that, because the way you can get in the next day is we send you out an email and you click the email and you're able to come back the next day for no cost. So again, just you got to give us the right emails, because we've had a lot of guys and gals who come in and they don't give us the right email, so we can't you can't come back in, because that's how you get back. So again, any other questions you got, please feel free. I hope that was a little bit informative here. Again, the important thing is that we do stuff off the floor, and